Hello. Welcome, Colin. Nice to see you. There we go. Okay, so Thursday is, of course, budget day. The budget will show that the government is on track to post a small surplus in 2014-15. That is a considerable achievement given the effects of the 2008 recession, the global financial crisis, and the Canterbury earthquakes it had on the government's accounts. At the same time, the government is investing for the future. We're continuing to spend money in priority areas like health and education, and areas that will help build a more competitive economy. The difference is that we are finding savings and increasing revenue to pay for these things. We aren't just layering new initiatives on top of everything the government is already doing. In terms of budget economic forecasts, you'll be aware that in the last couple of weeks we've seen some developments in Europe that have increased uncertainty in the global markets. Anti-austerity parties are expected to do well in the second Greek elections in June, and the Greek banking system is under considerable pressure. Concerns are also growing around the Spanish banks, which were downgraded last week, and the Spanish government bond yields have been rising very sharply. However, it would be unwise to rush to judgment. We always knew that Europe would have its ups and downs. It's important to differentiate whether these events are one of the downs we all expected or whether they constitute something more fundamental. Volatility is of itself nothing new. You might recall that there was a real sense of crisis in Europe late last year, but this settled down in the new year as European governments responded. So we have to see how things play out over a slightly longer period of time. The advice we've had from Treasury is that the main budget forecasts, which you'll see on Thursday, remain its best judgment in the face of uncertainty about where the New Zealand economy is going. Those forecasts already factor in a good deal of weakness and volatility in Europe, including a sharp recession across the euro area. However, it's true to say that the risk of something worse happening in Europe has increased, even if the central scenario remains the same. So we are closely monitoring developments. In terms of our fiscal strategy, it remains absolutely the right one in the circumstances. If the financial markets do tighten up, then it's hugely important New Zealand is seen as a good risk. By committing to surplus by 2014-15, we are taking a responsible path of fiscal management, while at the same time continuing to invest in future growth. If the global economy really took a turn for the worst, we've always said that we would look at the right policy response. What we've shown over the last 3.5 years is that we can successfully adapt to situations that present themselves, such as the Canterbury earthquakes. It's far too early to speculate on that, and in the meantime, we're putting the economy in the strongest position to cope with any crisis by getting the books back into order and limiting debt. Earlier today, Corrections Minister Anne Tolley and Associate Corrections Minister Peter Sharples made a pre-budget announcement at Rimutaka Prison. This announcement involved reprioritised funding of $65 million over 4 years for several initiatives that are aimed at breaking the vicious cycle of prisons and reoffending. These initiatives are focused around increasing drug and alcohol treatment, as well as increased education, skills and employment programs for prisoners. Some of the initiatives announced today include more than 33,000 additional offenders, an increase of almost 500% to receive new and expanded drug and alcohol treatment in prisons and in the community. Around 2/3 of offenders have addiction problems, and this is a major driver of crime. Nearly 8,000 more prisoners and community offenders to receive new and expanded rehabilitation services, a 230% increase in numbers. The National-led government is serious about making communities safer by reducing reoffending. Today's announcement will help contribute to our goal of a 25% reduction in reoffending by 2017 and 18,500 fewer victims of crime every year from 2017. In March this year, I announced 10 challenging results as part of my expectations for a more efficient and results-driven public service. Reducing crime by reducing reoffending was one of those challenging results. The goal announced today of a 25% reduction in reoffending by 2017 is one of the measurable and stretching targets that sits under that result. In terms of the House this week, we'll be doing the Crown Entities Reform Bill, the Reserve Bank of New Zealand Covered Bonds Amendment Bill, and the Commerce Commission International Cooperation and Fees Bill. In terms of ministerial activity, my own activity, tomorrow I'm at caucus and question time. Wednesday I'm also in Wellington. Thursday I'll be here, obviously it's budget day, and Friday I'll be in Auckland. Among other things, on Friday I'll be addressing the Trans-Tasman Business Circle at lunchtime on Budget 2012 on Saturday and Sunday. I hope you'll all be joining me at the National Party Northern Regional Conference, the last of our season. And finally, for those of you who may be interested in these things, the IDU, International Democratic Union Function, is holding a function here in New Zealand on Sunday, and I'm highly likely to be meeting Lord Ashcroft, who is a senior IDU holder, and will be here at the meeting, just in case you check out his jet on the runway.
How do you think this year's budget will be remembered? It's your second consecutive zero budget. How do you think it's going to go down?
Well, I think it'll be remembered as a very sensible, considered budget that correctly addresses the issues that New Zealand faces, which is we need more money spent in health, education, science and innovation, but we don't want to rack up more debts. And I know that there are other political parties already talking about spending more money that this country doesn't have. All I can tell you is, in the end, if you spend more than you earn, it's called Greece. And I don't think we want to end up in that position.
David Shearer today is saying that there needs to be cross-party consensus on the superannuation age, and that's one of the tough decisions that needs to be made with the current sort of fiscal situation. Do you think there is room for cross-party talks on that?
Well, I don't see any real need to do that. I mean, the major political parties went into the 2011 campaign very clearly laying out their economic prescription. We made our recommitment to hold the rate of super at 65. Labor campaigned on raising that rate. The New Zealand public had a clear choice, and overwhelmingly they rejected Labor.
But if you were serious about being fiscally responsible through the medium and long term, surely you would look at the age.
Well, as I've always said, at the moment I don't think that's the issue that the country faces. Some people want to have that debate. Well, even the Retirement Commissioner herself thinks that issue should be addressed in 2020. There are a lot of issues to address before then, and my view is at this point it's affordable.
Just in terms then, isn't there supposed to be some sort of working party set up for Peter Dunn's idea of a flexible age, is that right? Or?
That's right, yes. So that's around the age you could take it, but it wouldn't alter, as I see it, the fiscal liability of the Crown, because what it would mean is that people would be able to retire earlier than 65, but obviously take a reduced pension, or elect to retire at over 65 and take a higher pension, but the cost of the Crown wouldn't be altering.
So is that something that you would feel sits in your previous pledge not to change the retirement age? Or do you see that, because it doesn't alter the fiscal cost, as being something that's quite doable within that?
Yeah, it's something that's quite doable, and in the end it's an election, a voluntary election by any individual, and we would be taking away any entitlements they have. If people want to choose to take more and retire slightly later, that's their call. Whether it's workable or not, there are lots of challenges in that, but we're happy to have that discussion.
Isn't it fair that people though to signal early that the age will go up? It gives time, those people who might be in their 30s, 40s and even their 50s, time to adjust to the fact that they won't get the state pension until a bit later?
I think realistically, if you're in your 30s or 40s, you're 25 to 35 years away from retirement. So no, I don't think that would be terribly necessary. Look, we've made our call on what we think is appropriate for the retirement age. We've also made our call on a huge number of other initiatives in the economic space. Labor have chosen to take a different response. They went into the 2011 election promising to spend a lot more money. In the end, New Zealand has rejected that. So that's our economic prescription.
But super costs a lot though. I mean, it's a big amount of spending. I mean, surely you should be looking at it.
Well, as I said, we're very happy with the economic numbers we have. It's built into the forecast models that Treasury's got, and Treasury's analysis actually of out to about 2020 at least, it's certainly not an issue that I terribly worry about.
Do you think you might look at changing your pledge at the next election, or are you locked into that?
Well, I guess anything can always change, but that's not my intention at this point, no.
What about if, as you say, conditions in Europe deteriorate? Is that one of the policies you'd re-look at?
Super?
Yeah.
No. Look, I mean, if you think about the two things that Labor have been talking about, raising the age of super or capital gains tax, neither of them would make an iota of difference in terms of any situation that may unfold in Greece. I mean, in terms of the retirement age, no one's argued that should be altered until 2020, well that's in eight years' time. In terms of capital gains tax, that doesn't raise a hell of a lot of income between here and 2020. So in our view, they are not the big issues.
So what is the strategy if it deteriorates in Europe? Do you cut more, or do you blow out the surplus target and say we'll get there later?
Well, I wouldn't want to speculate on that overly today. I think we've got a track record that's proven that we can alter to the circumstances that we face. I think New Zealand certainly is in a vastly stronger position than it was back in 2008 when we became the government, but ultimately I don't think we would, if we were required, tremendously change our spending patterns. What is more likely is that we have less revenue. That would be the impact of the
But I guess New Zealanders would want to know that the big policies, the interest-free student loans, working for families, KiwiSaver, the ones that you haven't really touched in a big way,
Yeah.
would they be on the table if things get considerably worse as they could?
Well, that wouldn't be my intention as I stand here today. I mean, what would be more than likely to happen would be there'd be an economic slowdown, which would slow down the tax revenue we've got, and we might bridge that for a bit longer. But I mean, overall, we've been very reluctant to aggressively go after those areas because we think New Zealanders rely on that. We think we've done the right thing. I also think if you look at the amount of new budget spending we've had in our 4 budgets, I think as I said last week, it adds up to 700 million. And if you contrast that to Labour, theirs was about 20 billion.
Would be happy to ditch the surplus target though, because that's a good point, about that trading off the surplus target of 2014-15. I mean, it seems to be quite locked in stone in the last, all the talk out of your government. Would you be happy to push it back another year if things?
I wouldn't be happy to push back the surplus target if that was a situation that resulted in, because of a significant global slowdown, that might be beyond our control. I don't think there'd be a point of cutting just for the sheer sake of it. But I would equally, the government's been very focused on trying to get back to surplus, and I think for very good reason. I mean, if you look at, if there is further weakness in Europe, following the prescription the National League government has is absolutely the right one. We want to be on that list of countries that is seen as a good risk. That's exactly the position we're in at the moment. Our bond yields are coming down. It's cheaper for New Zealand to raise money, and it's cheaper for our companies and individuals to raise money. And the last thing we want to do is abandon that target unless we really have to.
So if it's so cheap for us to raise money, then why not just raise a little bit more? We're one of the most favourable nations in terms of our bond yields.
That's right, but we have high levels of private sector debt. We've made considerable assurances to the rating agencies that we intend to get back to surplus by 2014-15, and I don't think it's in New Zealand's best interest to be borrowing money unless we absolutely need to.
Have they given you any signal?
Earlier today that getting back to surplus by 2014-15 wasn't necessary if it was going to.
Who said that?
Kieran Curry at Senator Ford.
Oh, Kieran Curry, yeah.
He said that if it was going to be at the risk of slowing down growth in New Zealand, it wasn't worth doing.
Well, that's what I've always said. I mean, I think we're on track to do the right thing. I've always said, as I said at the start of the year, that there's some flexibility there if we absolutely need it and the global situation demanded that. But I don't think that's the situation we're facing at the moment. I mean, I can't be sure the way things will unfold in Europe, but I will say we've been at this sort of situation before. We had it with the inability to renegotiate the new debt ceiling in the United States. We've had it in Europe late last year. Of course, things could get a lot worse, but equally this may be yet another storm that blows over.
Looking at it as someone who's been a financial market player, and you're looking at the global economy, are you optimistic about what you're seeing?
Well, like everybody, we're obviously concerned about what we see in Europe. I mean, it's a serious situation, but it's been a serious situation for quite some time. And as I said, in our forecast, Treasury has built in a significant...
Are you optimistic about it?
Well, as optimistic as you can be. I mean, I think the situation is more volatile and risky now than it was probably 3 months ago, but that doesn't mean that the situation won't blow over. What I can say is New Zealand's in a lot better shape. I mean, fundamentally, our businesses have got their balance sheets in order. Our banks are a lot better funded. The government's been on a track where it's been sensible about what it's been doing, and the economy generally has been underpinned by strength of what's been happening in Asia. So I feel a lot more comfortable as I stand here today than I did when I assumed the job of being Prime Minister back in 2008.
When you say Treasury has taken into account in the main scenario some of that European uncertainty, does that include them exiting the euro? And does it also include Greece exiting the euro, and does it also include the drop in commodity prices and the fall in the dollar that New Zealand's experienced most recently, probably since their forecasts were finalised?
Yes, the last forecast would have been finalised at the end of April, so they will have factored in all of that information up until that point. There's obviously an upside and a downside scenario, which probably encompasses the one that you're talking about, and that'll be in the budget, but the main forecasts, I think, are in line with the fact that they expect to see a significant recession in Europe, but not necessarily a significantly worse position than maybe we are at the moment.
The Aussies-
And still your view that we won't go into a recession period?
Well, obviously, no one can be absolutely sure what happens, in terms of the next 6 to 12 months. But on the best information we have lots of advantages, and we haven't seen anything in our forecast which indicate that we would. I mean, we still have relatively high commodity prices, although they're coming off. Exchange rates helping in terms of coming down a wee bit in that regard. Asia's still a strong market for us. Australia has still got higher growth rates than most of the other parts of the world, which is good. We have domestic stimulus as a result of the Christchurch earthquakes. So look, it's always possible, but we're in much better shape than most others, and that's why we keep saying, we've grown in 10 of the last 11 quarters. We were predicted to have a faster growth rate than all of the Eurozone, the UK, America, most probably Australia, and many other parts of the world.
The Aussies are factoring in a 0.75% drop in Eurozone GDP in 2012. Are ours similar to that?
You'd have to check exactly the bill English, but I think it's in there that we're a magnitude. They're certainly factored in a significant recession.
Before 2014 comes 2013, what sort of deficit are you looking at in the coming year, in the order of?
You have to wait till Thursday.
Is it out of line with the sorts of deficits you were looking at before the election?
Wait until you see on Thursday. It might be one of the surprises in the budget.
And what about the outturn for this current year? I mean, Mr. English has said 10 to 12 billion. Is that still the sort of range you're looking at?
Might have to wait till Thursday.
So a good surprise or a bad surprise?
Well, wait till Thursday.
Prime Minister, just on another issue, the Yongmin Yang case. What do you make of David Shearer's handing of it, the Bill Liu or Yongmin Yang case? What do you make of David Shearer's essentially taken Shane Jones at his word? What do you make of Shearer's handling of this?
Well, it's hypocritical, isn't it? I mean, basically, talk's tough, but the first situation where he's faced a situation where he's been highly critical of me and National League government, he's simply taken the guy at his word. And I'm not questioning Shane Jones's word, but I was always very cautious as leader of the opposition before I leapt in and criticised others. And David Shearer hasn't been.
Well, he says, in a different approach to you, he's spoken to Shane Jones at length for more than 2 or 3 hours. He's gone through the documentation to also reassure himself the process was basically above board.
Well, my understanding is Shane Jones hasn't wanted to answer the questions about why he received all the official advice to reject the application for residency and for citizenship, and then made the decision to change that. Now, if Shane Jones and David Shearer want to answer those questions tomorrow, that would be great. I'm sure the media will be interested to find out why they made that decision.
But your ministers would overturn, like for instance in immigration cases, they go to a minister at times and where they would actually overturn what the official advice was because they've rejected that application. I mean, that's not unusual.
No, that's right. There are times that ministers make different decisions. I mean, I guess they'll tell us why tomorrow.
Has there been any suggestion to you that there needs to be an inquiry into this matter?
I haven't had any advice on it.
I mean, what do you make of the facts of the case? Essentially, here's a guy where Shane Jones has warned that Yongmin Yang or Bill Liu had an Interpol red alert on him, and he's still overturned the official's decisions. What do you make of the facts of it?
Well, I haven't had any briefing on the case, so I honestly can't tell you. In the end, it's for others to make their assessment. It's important to understand that it's Bill Liu that's on trial, not Shane Jones. But it'll be interesting to see what comes out as a result of that trial.
The Greens and National today have suggested accessing the $100 billion that Kiwis have in term deposits, well, the government should actually take money rather than sell off assets and lose that revenue stream. What do you think of the idea?
Well, we disagree with that economic analysis. We asked the Treasury to provide us advice. They provided us advice that supported the mixed ownership model, and I'm much more of a mind to accept the Treasury advice than I would be of basically girls.
Do you accept the premise, though, that the current account deficit could well get worse? It's already predicted to get worse, but could be even worse as a result of this, because some foreign ownership of shares in those companies?
No, not really. I mean, look at the margin. For a start, we're saying that 85 to 90% of those companies are likely to be held by New Zealanders. Secondly, and there's no reason to believe that that wouldn't be the case. Secondly, in terms of the current account deficit, that's been a deficit on 2 fronts. Obviously, the significant part's been the trade deficit, and we've managed to turn that around. but obviously there's still a lot more work to be done. In terms of the investment account, actually it's about neutral in terms of our investments both onshore and those offshore. So at the real margin, it would be a very small amount if it was owned offshore, and it's not likely to be material in terms of the current account.
Lee Brown has today repeated his call for the government to step up to pay its share of the Auckland City Railway. What's the government's response to that?
Well, we would just need to be satisfied that it fitted the criteria of being a good investment. At the moment, the most recent report I've seen on the Inner City Rail Loop doesn't support that view. It supports the argument that people may well use more rail, but they're likely to get off other public transport in doing so. Now, that can change, and obviously there's been significant investments in rail, both with our government and the previous government, in terms of double track and electrification and the likes. So we're not saying never, we're just saying we would need to see better analysis that that was the right economic decision. Certainly at the moment, we don't have the cash to do that.
The Christchurch City Council, Bob Parker in particular, says that they've proven that they don't need to do asset sales in order to make the recovery work, make their long-term plan work. So why does the government keep raising this?
Well, I'm not sure they've been in a position to actually answer that question today. If you have a look at the amount of cost of the likely cost of the Christchurch rebuild, and you consider all of the assets that may well be, where there may well be a shortfall, and then ask the question who's going to pay for those assets, it may be more logical for Christchurch to have a different mixture of assets. There's nothing terribly magical about their airport. It's a great airport, but whether they need to own all of the amount of shares that they do, or might want to own a bit more of something else, is an interesting debate for them to have. In the end, that's a matter for them. I'm not going to force them to do that. We're just simply saying that they are in a unique position, slightly different from other councils around the country, where they've got some very large and potentially quite profitable projects, and they might want to think about the mixture of those assets. I mean, if the view that we're all going to take is that once we own an asset, we can never change that asset, then we better make sure we get our investment decisions right on day one. Personally, that's not the view that's been supported around the world. And I was recently reading some analysis of countries around the world that have engaged in either the mixed ownership model or privatisation, and the numbers are tens of thousands of projects around the world in pretty much well over, I think it was 150 countries.
You say you wouldn't force them, but under the new Local Government Act, since you can cap rate increases to inflation plus,
yep.
You are in a position to basically put them between two bricks, aren't you, and say you have to do it?
No, they'll be in the position to decide how fast they want certain assets to be developed.
What's the council supposed to make of it when the Earthquake Recovery Minister, the local government minister, and the Prime Minister says they should be open to the idea? Are they not supposed to take that as a fairly broad hint that they should?
I think they should be open to the idea. I mean, it's as straightforward as that. I mean, we're simply saying, look, we're all grown-ups, let's have a discussion about the mixture of assets we own. Mum and Dad do that in their home every single day. They think about the mixture of assets they've got. They think about where they might want to buy something else or sell something. Very few people live in the same house forever, own the same car forever.
So going back to my question, so you're really saying to them, we may have to cap your rate increases. If we do, your only alternative will be to develop these assets more slowly if you want to keep the ones you've got.
Well, I'm simply saying, that's what I said earlier, I don't think they're in a position to make that call yet about whether they absolutely might want to consider that or not, because I don't think any of us are in a position to fully understand all of the assets that are likely to be developed and who will pay for them and what share of them Christchurch might want to have. I'm just simply saying that they have some really exciting opportunities to do some remarkable things. They might find the people of Christchurch say, I'd rather the council owned a bigger share of their convention centre or whatever it might be, funded with less debt and slightly less shares in Christchurch Airport. They may not, and that's a matter for them as local government. But I think we can have a grown-up conversation about it.
But you will be able to say to them, those are your options, you can't fund those things by a larger rate increase.
What I can say to them is this government has put its money where its mouth is. We put $5.5 billion aside in the last budget. If you think about that with the combined EQC liability, it's about $13 billion of the so far $20 billion cost of Christchurch, and it may well cost more. So we've certainly stepped up to the plate. If things want to go faster, we might need to look at all of the options on the table.
But you can't use rate increases to do it, large rate increases to do it.
They might be able to. They're not forced by the law. That's an option in the law. The law also potentially gives them an option to come and talk to the local government minister about other alternatives. And Christchurch clearly is in a different position to others. But they have huge amounts of infrastructure they might want to develop. I don't think it should be seen as a negative thing. I think there's actually a lot of very exciting things they could do. They just might want to test those boundaries.
Mr. Parker has told one of our reporters in Christchurch that potentially the government actually just doesn't fully understand the financial solutions that the council may be exploring. But you seem to be saying that actually the council itself doesn't understand what it's ready to unleash.
Well, I don't think anybody can fully quantify the level of development that might take place in Christchurch. We have a sense of the ballpark, but we don't understand the absolute component bits at this point. There's still ongoing disputes about insurance payouts, what might be developed, and then ultimately what the options are. But take a look at a city like Melbourne and think of the incredible things they've done there to develop that city as a hub for sports and culture and entertainment. Christchurch might take the view that it wants to be the Melbourne of New Zealand, in which case it might say to its people, look, here's a better mix of the assets we've got. I'm not saying it will, I'm not saying we're going to force it, I'm just saying it might want to have that conversation because it's in a unique position to do that. But in the end, it's up to them. But there are only very limited ways councils can fund big dollops of infrastructure. They are literally debt or rates. And in the end, both of those roads lead to the bank, because even if you want to go and borrow a lot more and pay for that through rates, in the end, there's only so much that the ratepayers can afford to pay. Okay, thanks very much.